Hey, what's up, guys? Welcome to the Master Passive Income Show. My name is Dustin Heiner, and I'm here to help you learn how to quit your job by investing in real estate rental properties so you never have to work a JOB, a just over broke job again. Now, I had always been just over broke until I started investing in real estate, and I started reading books before I started even investing anything. And a couple books that I read that I love are written by a gentleman by the name of Robert Kiyosaki. And the very first book that I read of his was called Rich Dad, Poor Dad. I did a review of that book as well. So if you go in the description, you'll see the link to that review as well. But the book I want to talk about today is another phenomenal book that he wrote. And he's written many, many books. But this book got me thinking down the path of the way rich people think. Now, poor people usually think, and I was always poor. I grew up poor. My parents were poor. It's just the way it was. But then I learned how to think differently and how to make money differently. You know, us poor people, we would work a job, and it really does stand for just over broke. We're literally just over broke as we're working a job, working for somebody else. And as we're working that hour, we get paid for that 1 hour. But the rich don't think like that. They work 1 hour and get paid over and over again. In fact, they also work 1 hour, create a business, and then have other people work in that business, pay them good money to work in it, and make money over and over again. So this book that I absolutely love, alongside with Rich Dad Poor Dad, this one is called the Cashflow Quadrant. Now, the cash flow quadrant is basically how you make money. That's, if you sum everything up, it's how money comes into your pocket. And there are 4 different types of quadrants inside of this, I guess, metaphorical quadrant. And so if you're watching this on YouTube, you're going to see all of these different things. I'm going to put on the screen, and it's going to be right here so you can see it as well. And so it's going to be showing us that the quadrants inside of the way that we make money, how we have cash flow, there are 4 different quadrants. So you think of a plus symbol. That plus symbol has a northwest, a northeast, and a southwest and a southeast, or a upper right, upper left, lower left, and lower right. I'm explaining it very horribly, but there are 4 different quadrants, and we're going to go through each one of those. So the first quadrant, in the upper left quadrant, is the employee. That is the employee, somebody that works 1 hour and gets paid an hour. They basically are told what to do, when to do it, and how to do it, and all that sort of stuff by the business owner or the organization or whatever it might be. So that's what everybody starts in, and it's a great place to be in, but not for everybody. If somebody wants to move on to then being their own boss, then you would move into the lower left-hand quadrant, and that is the self-employed quadrant. About 95% of the population is in this left side of the cash flow quadrant. You're either an employee or you're a self-employed type of person, or you're working for yourself. And imagine you have a carpet cleaning business. Well, in that carpet cleaning business, you go and you basically are cleaning people's carpets. They hire you to come into their house, clean their carpets, and then they pay you, and then you leave. Hopefully you'll get recurring people coming back to you like every 3 or 4 months and say, hey, I need you to clean my carpets again. We just had a party and it's dirty. So hopefully you're continually make money and growing that business. But it's just you, and that's your self-employed, which is not a bad thing because you are now getting rid of your boss and now you're your own boss, which is such an amazing feeling. The downside, though, is that even though you're your own boss, you're trading one boss. You know, if you had a regular job, you're trading that one boss for many bosses. Your customers are now your bosses. So that's a downside. But like I said, 95% of the population is going to be in this left side, either an employee or a self-employed person, which is fantastic. It's actually really good. I love employing people that are employees. I love having people work for me that are self-employed. So that it's absolutely fine to have that. But for the other 5% of the population, if you're listening and watching this video or listening to this podcast, you're also going to, as well, you're going to be like me, thinking, well, I want a little more, or I want to be different. I'm not that 95%. I want to be the 5% that makes money differently and also provides people jobs and at the same time grows a business that is very, very successful, helping so many other people in whatever way possible. And because I love real estate investing so much, I created a free course for you to get started investing in real estate. I just want to share it with everybody because I want them to learn how to invest in real estate and how that can change their life just like it did mine. Go to masterpassiveincome.com/free course. It's all one word, /free course. It'll be in the description as well. So go there and get that free course where I will show you how to analyze properties, how to analyze the deals, how to analyze property managers, find new areas of the country to invest, make sure you're making $250 or more, all that sort of stuff. I'm going to show you step by step how to do that. Go to masterpassiveincome.com/free course. Now, the biggest takeaway that I took from this book, and I want you to take away from this book as well, is you should move from the left side of that quadrant, which is the employee and the self-employed quadrant and section of the Cashflow Quadrant, to the right side of the Cashflow Quadrant. That is where you are now an investor or a business owner. An investor would buy rental properties or real estate or something like that and make money from those. And then you would also have a business owner. Business owner is basically employing people, giving them great jobs so that they can be employed and make money to provide for their families. But at the same time, you take a little bit of money off the top because you're providing the service for your employees and your customers. Now, in starting the Cashflow Quadrant, I personally said, you know what? I want to be a self-employed person. I just want to be on my own. And I thought that was the best way to go. I'm not saying it's not. It's a great way to go, but there are other ways since then. But what I would do is I would start businesses and I would have many businesses, but at the same time, what would happen is I'm trading that one boss for many bosses. So I've had a paper route where I was delivering paper and I was like 13 years old. From there, I started a graphic and website design company where I was designing websites and images and all that sort of stuff. And I was servicing the customers, making sure that they were taken care of. From there, I created a skateboard manufacturing business. Can you believe that? I literally created and made out of my garage longboards or skateboards that are longboards, kind of simulating surfing. Super fun to build, but at the same time, it was hard to sell. You had to go into each store with a set of inventory, it's a bunch of skateboards, and try to sell them at a reduced cost so that they can then resell it. That was a lot of work, and I realized, man, this is a lot of work. I got to figure out something else. Then from there, I started a retail establishment. I literally started a convenience store and a pizzeria, and I was working at having employees do all the work, which was great. But the downside was, this was in 2006, 2007-ish, 2008, when the market was going up really well, started the business, and then 2009 hit and the crash hit. Well, my business, because I wasn't physically working it, I was more managing it. I had employees run it. All my money was getting taken up by my employees, because at the same time, because of the downturn in the market, because of the crash, I wasn't making very much money at all. And in not making much money, I started losing money because I was having to pay more money than was coming in. So being a business owner, trying to employ people and serving customers, that was really, really hard. So that was my venture into the business section of the Cashflow Quadrant. So getting out of the employee and self-employed over to the business owner aspect. Now, the business owner, I really enjoyed working with people and providing people with jobs, but I realized it was a lot of work. My hat's off to people that have retail establishments and manufacturing companies. That's a lot of work. Now, what I did though was I jumped into the investor quadrant. At the same time as I was building my other businesses and still working a job, that just over broke job, I was doing all that at the exact same time. And I decided I need to also become an investor. So I bought my first rental property. I bought my first investment property. It was a home. I spent $17,000, and I'll put a link in the show notes. At least I hope I will. That'll show you how I actually did it and the process of how to invest in real estate. And so as I was doing that, I bought a property, and then after a couple months, I got it rented out, and I had somebody else managing it. I got a check for like $300 or $350. I said, what is this? I did all my work about 3 months ago, and I'm starting to get checks. I'm starting to get cash from these properties. This is absolutely amazing. And I was working so hard in my other businesses and my job, and I was making okay money. But that one rental property making me $350 a month, I thought, If I got 10 properties, that would be $3,500 a month. If I got 20 properties, that'd be $7,000 a month in passive income. That's like profit in my pocket. I think gross rents were like $10,000 after, for me, it was after 6 years. I had 19 or maybe 20 properties. That was 19 properties. And I had $10,000 in gross rents and $6,500 in passive income. So that was me jumping into the investor side where I bought one property, saved that money, made money, saved that money, bought another property, had 2 properties, saved that money, made that money, then took all that money from all those, bought the third one, and then bought a fourth one. And I even had some advanced strategies, like I borrowed money from my dad, like, $15,000, borrowed it from my dad to buy another property. I even refinanced properties, pulled cash out, bought more properties. I recycled my money over and over again. And one hugely advanced strategy I would not necessarily recommend, I borrowed money out of a credit card to buy a house. Now I've already paid that credit card off. I still have the property. I'm making money over and over and over again from those properties. And so because jumping into the investor quadrant, for me, I now have been successfully unemployed. When I was 37 years old, I quit my job and I'll never work a job again because of all my rental properties. Now, I want to jump further into the lessons inside of the Cashflow Quadrant book. And what Robert Kiyosaki explains in his book is how business owners, how the wealthy, how they make money, and basically a cycle of creating money out of their business. So this is what they normally do. They would start a business. Let's just say they start a manufacturing business and they issue shares of their company to themselves. Like they're 100% of the owner. They start building the business even more, getting customers, hiring employees, and they start making money. They start generating money. And so as they start making more money, they start to add to the business and add more value to the business. As they're adding value to the business, they're realizing that, hey, if I put more money into the business, I can make the business even better. I could hire more people. I can get better equipment. I could do marketing. I could do all these sort of things. So they look to get investors to invest into their business. So after they start the business, they create that company, issue shares or a portion of the ownership, but they basically own 100% of it. Then what they do is they take all those shares after the business is big enough, they take all those shares and they break them up into a bunch of tiny, tiny pieces and they make it as a stock. And if you buy one stock in a company, it's not like it's 1% or 10%. It just depends on the company and how many shares there are. So if there's like 4 million shares and you have one share out of all the 4 million, that's a very tiny fraction of the company. So what happens is as you're building your business and as you start growing it, starting to make more money and you realize I need cash, what the rich people do then is take that business and they put it for sale. Just portions of the business, not the whole thing. So they'll sell in the stock market a portion of their business to investors like us, or really what it comes down to is poor people like us. They'll sell one share of 4 million shares for like, $30 or $40, which is like a fraction of the ownership of the company. They receive $30 or $40 and we get one share out of the 4 million. They still own the majority of the company. So that's how they do it. And then lastly, what they do is now, once they start selling those shares, the price of those shares increase in value. And as they increase in value, the value of the entire company goes up more. And the reason why people would want to buy those shares for more value than they bought it for, like a year or 2 years ago, is because the company's making more money. It's more valuable year after year, like Amazon.com. If you bought a share of Amazon when it first came out, I can't remember, it was probably like $40 when it first came out. Now it's like $2,000 or $3,000. I don't really know exactly what it is, but it's grown so much because the company is phenomenal and it's making a lot of money. So what you do is you're buying a share in a company that makes money. So if you think about Facebook started at $38 a share. So for $38, you can buy one share of Facebook. And when they had their first initial public offering, they made $16 billion. And they didn't sell the entire company. They just sold portions of the company. They made $16 billion. Can you believe that? I mean, do you imagine how many zeros there are? That's literally 9 zeros behind 16. $16 billion in just their initial offering at $38, let alone what the price is now. I'm not sure what the price is now, maybe $100, $200. And so that's just that much more money that they have in their pockets, as well as the owners. They can sell those shares and make money. But now us poor people, we buy those shares for $38 or $50 or $100 to grab a portion of that company. But here's what I want to share with the Cashflow Quadrant book and this review. And what I do is now, why don't we create those businesses? Why don't we be the ones that create the businesses that employ people, serve our customers, and make us money, and then we can sell those companies to other people to make more money? We absolutely can. So it's a process that we got to learn as we're going through the cash flow quadrant. Now, another thing that Robert Kiyosaki talks about in the cash flow quadrant are the levels of investors. Now, the different levels of investors are basically 5 different levels, and each one of us we start at the very first one and then we work our way up, hopefully get to the last one. But the level 1 investor is basically the zero financial intelligence person. So somebody who has no financial intelligence, they don't know how to create businesses, they don't know how to invest, they don't know how to do anything. They just know how to work a job and just over broke job, get money, and spend that money. So they're not getting ahead. They maybe even go into debt because they might be spending too much money. But basically what it comes down to is they are living just over broke because they work an hour and get paid for that 1 hour, and they're not investing. They're not looking at their future and saying, eventually I'm going to stop working because I'm going to get old and tired. And they don't put their money away for the future, or they don't buy investments that would help make them money. So that's the level 1, the zero financial intelligence person. The level 2 are savers, and this is what he calls them, savers are losers level. So level number 2 is savers are losers. And the reason why is they put these types of people, and I was there too, they put their money inside of a bank account. They put it into a savings account where they get a little bit of interest. Now, here's what's funny. I literally opened a checking account and a savings account at Chase Bank. And I looked at the savings account, and if I put $100,000 in there, they would only give me like 0.015% interest on my money. That is your savings account. If you put money in a savings account, you're only going to be making 0.01% of your money, return on your money, which is so horribly, ridiculously small. It's not even 1%. It's not even 2%. It's not even 0.5%. It's so much worse than that. So if you put into a savings account, you're going to be losing money because inflation alone is 3%, if not more. So inflation alone is going to be eating up all your money. So if you have $100 and you get 0.01% per year return on it, but you're losing money 3% a year because of inflation, you're losing money just by keeping it in the bank. So you're losing over time. That's why the savers are losers. So we want to at least beat inflation so that $100 will stay $100 or more and make money. Now, the third level of investor is the I'm too busy level. Like, I'm really, really busy. I'm making decent money and I'm too busy to actually invest. So what I'm going to do is I'm going to hire somebody. I'm going to get a 401k. I'm going to get a financial planner. I'm going to get an IRA or buy some mutual funds. I'm too busy. If I have little money, I know that I should invest. And so what we do is we invest in these things that will not necessarily make us a lot of money, but they might be a lower risk from losing that money. And so you're just thinking, I have my life. I just can't focus on building a business. I can't focus on buying the right stocks. So I'm going to have other people do it for me, which is not a bad thing. It's just the next level. So that's level number 3. And level number 4 is the I'm a professional level. Like, basically, I know how to invest. I'm going to buy my own stocks. I'm going to sell my own stocks. Now, what's great is you keep all that money, but you also get all the losses if you do that. But so here's what I'm a professional person does is I'm going to buy a rental property, manage it myself, fix it up myself, find the tenants, evict them, do that all myself. And you're basically somebody that's a self-employed investor. You're a self-employed professional where you created another job for yourself. Again, not a bad thing. It's just a next step for where we want to get to, where we then are becoming actual investors. Now, the next level is the capitalist level. This is the capitalist level where, I mean, you know of all these companies that are fantastic, like McDonald's or Starbucks or Walmart or Amazon or Apple. These companies create jobs. Hopefully they create good jobs, but they create jobs for people, give them money for working, and they provide a service to their customers. They provide something beneficial to their customers. They're not taking money. Like the government just takes money from us. Companies, they have to work hard to provide something for us to want to give our money to them. And so what a capitalist level where we can get to is we are employing other people to do the work for us, to make us money. So in my rental property business, I have 30 plus properties now. I make a lot of money every single month from my properties. And in doing that, I employ other people so I don't work. I have property managers, I have contractors, I have inspectors, I have plumbers, electricians, all these sort of other people that do work. I pay them well. I even have an accountant who I paid him well. But the great thing is I don't pay. Well, here's the big thing. I literally don't pay them anything. I don't pay my property taxes. I don't pay my property manager. I don't pay for any of these things myself. My tenants pay for those. And the reason why is I account for every expense before I buy the property, and then I make sure I can rent it for more, at least $250 or more every single month from those properties. Now, the expenses are accounted for, like the taxes, insurance, all that sort of stuff is accounted for, and I know how much I'm rented for, and I make sure I'm going to make $250 or more. Again, those will be in the descriptions or the how to invest in real estate, the step-by-step process. I literally have an entire article written out. I mean, it's really, really long. There's so many steps in there, but I literally document everything out so you can get started. So check the description. I'll have that inside there for you. But that's what the capitalist does, is they look for opportunities to grow and scale their business, hire and employ other people to do the work, and just take a little money off the top. I also provide great housing for people, really, really nice quality houses that they want to live in. And that's what the capitalist does. We then can take that business and sell off shares if we want to. Now, I personally keep it for my entire family because that's how my family eats, is through my real estate. I make all my money through real estate, and we're blessed to literally I don't need a job. We don't have to worry about bills. It's just absolutely amazing. But that's the fifth level, and that's where we want to get to in our businesses and in our investing is so that we are becoming a capitalist, hiring other people to do the work for us and providing a service, a great service for everybody. And one thing that I must share with you in the Cashflow Quadrant and everything that Robert Kiyosaki puts out is the understanding that there is good debt and bad debt. Good debt puts money into your pocket every single month. Bad debt takes money out of your pocket every single month. Now, the downside of having bad debt is you could buy something like a car. You buy a great car to get you from point A to point B, which is really good, but every single month you're paying money out for that car. Good debt would be instead of paying, and even if you pay for cash for that car, even if you paid cash for that car, you paid $20,000 for that car, and it's not coming out of your pocket every single month in a lease payment or a loan, you still paid $20,000 for that car. But Robert Kiyosaki would share, and I would say the exact same thing. Take that $20,000. Buy an investment that makes you enough money to pay for that car loan. And then once that car loan's paid off, you have the car as well as the property making you money. So that's what I teach. I literally do this. Instead of buying a car for $20,000, I'll buy a rental property that makes me $250 a month. And then I'll take that money and $250 a month and buy a car with that money. So once that car's paid off, I have the car and the investment. And that's what we want to learn, is that good debt puts money into our pockets and bad debt takes money out of our pockets. Now, remember, as you're going through the cash flow quadrant, you're going to have the employee, the self-employed, the business owner, and the investor. We want to go from the left side of the quadrant to the right side of the quadrant as fast as possible, as well as become an investor where we have investments that make us money every single month. So with the cash flow quadrant, I also want you to check out the Rich Dad Poor Dad review of this book. So the link will be in the show notes. So go to the review of the Rich Dad Poor Dad. And these books are fantastic. They really got me to where I am today, where I literally am successfully unemployed. Like you can see in the show notes, or you can see in the video right now, successfully unemployed. I absolutely love not working a job and now being able to help thousands and thousands of people to invest in real estate, to learn how to be successfully unemployed. It's such a blessing. So you guys are fantastic. Thank you so much for being here on the Master Passive Income Show. I hope you really enjoyed this cash flow quadrant review, and I want you to get started. Start investing. And I want you to get started investing. If you text the word rental to 33777, RENTAL to 33777, I will literally give you my free course. It's a free downloadable PDF that you're going to get. It's going to walk you through how to analyze deals, how to find properties, how to get the right property managers, how to manage the properties, all that good stuff. I'm going to show you that entire process. Text the word rental to 33777. Now, you guys are fantastic. Also, check in the description and the show notes. You're going to get all these great information, even more so, like even the images of the cash flow quadrant and everything else in there as well. So go get all that. So you guys are fantastic. Thank you so much for being here. I look forward to seeing you guys next time. All right, see ya.